It's time to spotlight Beyond Meat and the state of the meme trade. Joining us now to discuss is Dave Mazza, the CEO of Roundhill Investments. Dave, thank you for being with us today. You know, a very exciting time to talk meme trade in recent days. Let's focus on the MEME ETF. This was one of the big drivers behind this crazy action we've seen in Beyond Meat. How do you decide which stocks make the cut into the MEME ETF?
Yeah, the recently launched Roundhill MEME ETF focuses on two components, primarily to identify stocks that have characteristics of memes or the potential to become meme stocks. So first, we use quantitative data, so measures of trading volume, implied volatility, things like short interest. And then we have a quantitative, so that covers the quantitative input, coupled with a qualitative input where we're using social sentiment, screening online communities to identify stocks that may be trending, like we saw with Beyond Meat in the early days, and then most recently with stocks like Krispy Kreme.
And when you say measuring social sentiment, how do you calculate that in a way that ends up resulting in you picking a company that turns out like Beyond Meat and Krispy Kreme?
You really have to use a mosaic approach. So we know that there's huge growth of online communities, right? We, of course, know that started with Wall Street Bets during the COVID period with the OG meme stocks, GameStop and AMC, but that's of course expanded. So things aren't just happening on Reddit, they're happening on X, they're happening on Discord, they're happening in other places, and they're happening globally. So it's not just a US phenomenon. There are investors all over the world who are self-directed, who really care about taking positions in companies. And so we actually span a cross-section of those information sources to create sort of the data that we need to identify companies, but also really embrace a nimble approach. You know, for example, we added Beyond Meat earlier this week, Krispy Kreme yesterday. So it's it needs to be very, very adaptive to stay attuned to how meme stocks can evolve.
So in this adaptability approach, how often are you adding or removing companies from the MEME ETF?
So under normal courses, the fund will rebalance at least once a week. But we actually have the ability to be more nimble than that. So we could be adding or removing stocks on a daily basis, but primarily at least once a week, we'll identify sort of a new basket of securities that will make its way into MEME.
And retail investors are proving that they can no longer be ignored. But times have changed since the GameStop and AMC frenzy that we saw, back during COVID times. How has their influence and power changed as it relates to memes?
Well, I think retail investors are a force in the equity markets that cannot and should not be ignored. I think historically, professional investors, institutional investors really looked down on the retail community, right? There's a book called Dumb Money and a movie coined that for a reason, but I think it's the furthest from the truth. We saw retail investors in 2025 actually buy the dip that we saw in April. They're both by most measures, retail favorites are outperforming hedge funds and things of that nature. And that may not always be true, but the bottom line is that retail investors make up a significant portion of the equity market. They've gone from something like 5 to 10% to on a normal day in up markets, down markets, sideways markets, making up around 20% of total trading volume. If you include the use of options, that number actually increases. So retail is actually a force in the market. I think it's a different type of momentum. Historically, we just thought about momentum as what stocks have done well over 9 months, 12 months, what have you. But retail is a much more adaptable, nimble force of momentum in the markets, which is why the MEME ETF really needs to reflect that dynamicism.
And retail traders are certainly nimble. They tend to move very quickly. Some argue they move much more emotionally than other investors do. So with that said, how do you protect against chasing hype or volatility that could fade just as quickly as it starts?
Yeah, you're absolutely right. So I'll answer the second part of your question first. The meme stocks are inherently volatile. They're because in many cases they're inherently controversial. In some cases, they are reflecting of just kind of pure momentum, like we're seeing with quantum computing, nuclear stocks. But that momentum is built on the potential for transformative growth in the future. which is why so many of those stocks, particularly in the quantum space, and we're seeing it today, have had outsized returns. But then there's also the component of companies that may have a bit of a broken business model or need a catalyst, like we saw with Beyond Meat, to really sort of regain favor, right? So we first started seeing some chatter in online forums about the short interest with Beyond Meat. But then they've signed a distribution deal with Walmart, which will be transformative for their business. Now, of course, that would need to pay off in the future with actual realization of revenue from that deal. But until we really saw that catalyst, there was not much to get excited about in the name. In fact, it was probably headed closer to bankruptcy than it was to actually seeing the returns that we've seen recently. And so that's why I think the meme stock and retail space is so interesting, because actually retail investors are trying to do more homework than we've seen with traditional and professional investors do on some smaller companies, which generally have been out of favor in equity markets.
And Dave, I'd love to get your thoughts on something. Whenever you see one of these meme stocks go wild, and as we've been covering Beyond Meat's moves the last couple days, you hear a lot about just meme stocks are speculative. They're pure speculation. Some even go so far as to say it's like glorified gambling in the market. What do you say to people like that?
Well, I think, again, these stocks are volatile, again, because they have sort of controversy associated with them. But I think it's a bit of a stretch to sort of say that it's speculation. With that being said, I don't believe the meme stock ETF should be a primary part of anyone's portfolio. It's really intended to be a satellite allocation for investors to tap into the power of retail, which has the potential to produce outsized returns. So what it's really trying to do is take advantage of that volatility and take advantage of the potential for episodic high returns to generate an outcome for investors. So there's always going to be a source of volatility with these stocks, but the MEME ETF is really intended to provide sort of a precise basket of not just one or two of them, but a grouping of them, which right now kind of provides interesting exposure. So you have names like Beyond Meat in the portfolio, Krispy Kreme was added, coupled with the quantum stocks, some of the AI adjacent stocks and nuclear stocks in there. So you're actually going to see the MEME ETF adapt over time to capture some of these micro themes that are playing out in the market.
So as that MEME ETF adapts over time, thinking about it in the context of someone's portfolio, would you consider it a long-term diversified strategy as it is so adaptable and nimble, or is it more of a tactical play?
I think it can be both. And it's really, that's one of the best parts of ETFs, in my opinion, not just the MEME ETF, but others. So some investors can use it for more shorter term tactical positioning if they believe that we're going to be in an upswing of momentum in the markets. Certainly, we've seen a bit of a pullback from that in recent days and weeks. But it also could be a long-term allocation for someone who wants to take a small part of their portfolio and say, I don't have the time and effort to really focus on identifying meme stocks myself. I don't want to day trade those stocks, but I do want to have the power of retail in my portfolio. So meme could serve that purpose for them.
Well, Dave, thank you so much for being with us. That's Dave Mazza, the CEO of Roundhill Investments, to talk all thing meme stocks, and Beyond Meat having some really incredible performance just up in the last 5 days, up 551%.